Hello, 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 everyone. Happy Monday morning. How's everyone doing? Hope everyone had a fantastic weekend. Good morning, Patrick. Good morning, Heinrich. Morning, Tony. Good morning, Jacob. Morning, Martinez. Good morning, PMG. Again, I'm glad everybody is tuning in. So far, we'll wait for some more people to trickle in, but it's very busy earnings week. Good morning, Options 22. Welcome back. Haven't seen you in a little bit. Glad you are tuning in also. All right. Hey, Royal Palms. Can we take a quick look at Google's after we get through some stuff? We will peek at Google. A big earnings week this week. What else we got on tap today? It's just a Chicago PMI 15 minutes after the open, after the cash open. Dallas Fed Manufacturing Index at 9:30 Central, and that's about it. Fed manufacturing from Dallas still expect to be in contraction. Chicago PMI has been pretty crappy recently, but forecast for a slight bounce. Let's just look at the rest of the week. So we're prepared. Tomorrow we got the ISM manufacturing numbers. That's the big thing. JOLTS job openings and quits, and then Dallas Fed services. Wednesday, mortgage stuff, EIA numbers. Wednesday's pretty quiet in terms of stuff coming out. Thursday, initial and continuing jobless claims, the ISM services number, and then Friday, first Friday of the month, except for occasional rarer occasions, is always non-farm payroll. So we're going to be getting the non-farm payroll numbers. So that's really the big thing. What do we got this morning? Pretty mixed market. Johnson & Johnson down, Amazon, which are earnings on Thursday, and Apple, both of those are up. Both of those have earnings on Thursday. Oil sector is up. Oil, we hit that 87.5 level I was watching for, and I'm going to continue watching for higher prices. Energy, you see, leading so far this morning, followed by basic materials, consumer, cyclical. So that is what's leading on the FedWatch tool. We're still at roughly 80% for a pause in September. Remember, it's not till September 20th, I believe, to be exact. So that's like 51 days away. And then it's the pause through the cut next May. Fear and greed still solidly in extreme greed. The Schiller PE ratio almost back to 32. This market is just insane, but it can keep going till it doesn't, and a lot of stuff still in overvalued territory. All right, in terms of earnings. See, don't you think Domino's Pizza should actually announce after the close? You know, who wants pizza for breakfast unless it's cold? I think they should be doing it after the close, personally. Today we just have after the close. We actually have Logitech. That's really about it. Tomorrow we got Verizon, GM, 3M, GE. Wait, this is a wrong. That's the wrong one. Hold on. Wait, that was from last week. There we go. I thought something was wrong. I'm like, they did it last week. SoFi was this morning. There we go. Transocean, Avis, Zoom, Info, nothing much today though. Here we go. Sorry about that. Pfizer tomorrow morning. Caterpillar. Where else do we sit? AMD after the close. Lots of interest in that with all the AI and everything going on with NVIDIA too. Starbucks, Pinterest. What else? CVS Wednesday. Generac. Kraft Heinz, PayPal. Here's where we can start getting going. PayPal, Shopify, Qualcomm are the big ones. Etsy. I know a lot of people still follow that. Thursday, ConocoPhillips from the gas, Wayfair, but really Moderna. Really after close. Amazon, Apple, Coinbase, Block, Airbnb, DraftKings, but Amazon and Apple. So Thursday after close, then we follow up with Friday non-farm payrolls. Not much going on Friday in terms of earnings. There we go. There. Sorry for the hiccup at the beginning. Hey, Christoph. Good morning, Connor. Good morning, Sterling. So we so far sideways correction. We had that 1 day the pullback after the Fed meeting. Bounce back on Friday. So far, follow through today. We did get the close above the 62.5 on the little one-day pullback outside range day. So I'm still watching for some slightly higher price action. 46.24, 46.34, 46.45, 46.55, 46.57 area. Really, that reconnects us. What's to get to that 87.5? Where does that 87.5 reside? We need to get 46.45 for the 87.5 rule in the S&P. Remember, we already hit it in the NASDAQ. Key support. I'll just really key off Friday's close is slightly higher than this little prior resistance level becoming support. But my first level is now this about 46.06, then 4600. And then key is about 45.95 on any pullback. Major pullback area would be 45.83. There is a lot of support in this area, though. So in order to even start looking at technical damage, as I mentioned last week, Thursday's outside key reversal day, that low is key. That is what I am paying attention to, especially if we pull back and close below that. Until that, everything is just chugging on higher. That doesn't mean it has to be an up day every day, but there is, again, we still have the probabilities for at least short-term higher prices. On that weekly basis, you see we're really overextended from that weekly rotation zone, and that weekly rotation zone is all the way back at roughly 4,500. So even on a longer-term basis, if we did get that big pullback to 4,500, it would not do long-term technical damage that. It would shock some people in the short term, but nothing in the long term. NASDAQ closing just above that 62.5, so I'm still watching for some follow-through. 15.99, really 16K again. 16,062. I'm also going to the reverse harmonics should we break out. And also in the NASDAQ, it's not Thursday's level that's key. It is Monday's level that's key on a closing. Monday's low on the closing basis. But the levels at 16K and then about 1662, 16,135, and 16,207. Remember, it already connected with the 87.5 on Wednesday the 19th, not last Wednesday or prior Wednesday. Cycles on the NASDAQ still heading up on the daily and still heading up on the weekly. So we could get some still upwards pressure on this. Any pullback level, major support, I'm looking at the NASDAQ, 15,750, 700 to 750 in that range, and then I'd fine-tune it with the lower levels. No technical damage, really, until I close below the rotation zone, but I'm still paying attention to Monday the 24th low as the key point. The Dow did not close above the 62.5 on Friday. The key closing area is this 35,657. And here's the intermediate levels I'm using, 35,715, then 35,773. The bigger level, if we do break above the high that connected with the 87.5 from last Wednesday, this 35,843, we break above it. The next major level is 36.1. The minor levels would be the little reverse harmonics, 35.9, 35,970. Russell, which did trigger the lower probability double top, is technically not invalidated yet. We don't have the close above the 62.5. It hit that double bottom, and we ran up and then sort of moved sideways. Now, if it trades through 2001.4, the double has been invalidated. And I got asked by a couple people, well, how could that be handled if it's already triggered, especially on a Friday? Well, when that little double bottom triggered, you can always take off, even reverse the position, and then look, as long as it does not invalidate the double up here. So let's say we stall it up here and make some other kind of topping pattern. This potential double top could be looked to reinitiate at a higher level. So at a bare minimum, what I like to do is hey, if that double bottom triggers, at least take off, I mean, the double bottom, at least take off the big double top pattern and look to reestablish it higher and let that little double play out, especially on a strong, we had a strong up day on Friday, and then be patient with reestablishing it, because even if it rolls over, you got a fair ways down. So you might take a little loss on pulling that off. But again, if you play the double bottom, you can make up for that loss and then look if it tops out again for it to reestablish at a much better price. If it gets invalidated, then the double's just invalidated. And that's one that didn't work. So there's a little information for you. Hey, Mega Chad, do I take L-theanine or any nootropics? That's what I probably have to cover that in a separate video, not on the offer, on the open, on the offer. SoFi up 13% on beat. Thank you, Sterling. VIX still 15 is key. Just set an alert at 15. The DAX, we completed 87.5, completed through the 100. Now the full retracement. So the next major target, I mean, these markets are just keep going, even with the not great numbers out of Europe. 16,700, then 16,825. You got to stay with the trend, though, until the trend ends. Notes. Is this a potential mini double bottom? Yes, it is. Never might trigger, but going to keep an eye on it. By the way, on the much bigger time frame, on a monthly basis, this is not qualifying a weekly, but if we got a monthly close above the highs from March, it would be a monthly still double. This can qualify as a monthly double. So that's again, we could rotate up and rotate down and then really wipe that out. That's just something I'm keeping an eye on a much longer term basis. Other than that, the only minor bullish thing, and that would actually be the trigger with back above the 200. I'm watching for another rollover play, though, personally. Personally, I'm watching for a rollover play, especially if we roll over from the daily rotation zone. The 10-2s, we're trading against the key resistance area, but have not broken out. Dollar index, I'm paying attention to Friday's high and low. Friday's high also coming in at the 50. We also now can take this as a stronger pausing bar. So we break above there. I'm looking at 101.96 to 102. Then if we close above 101.64, I'm watching then the target for 102.66. Then I will ratchet this up to the higher levels. But that's what I'm looking at now. Crude, pay very close attention. Oh, back to the dollar index real quick, because I'm expecting if we can break above Thursday's high and really get a move on, we'll reconnect with the 200 also. Crude, we finished the 87.5 rule. We closed back above on the 13th, got a couple-day pullback, then we finished the 87.5 rule. We're into an advanced clear path. Next target, 83.26. I would be in trailing mode at this point. We break above 83.56. Remember, we're getting to the highest area since the closes back in April. We break above those highs. Next level's 86 and 88.50, and we're squarely. This would be the first time we're really getting some key breakout. We had a quick little reversal breakout above the 200 back last August, a year ago coming up. But this is the first sustained push that's actually held now above the 200 for multiple days. So we could be making a pretty decent shift in the oil market, which could rear up in inflation. Natty gas also making a very strong base. Natty gas this is building a strong base. So as long as we really don't get a close back below 250 on at least a daily basis, this could be a breakout play. I don't know when, because again, we could base here, but this is breaking. So we had the lower base we broke into a higher range with a higher, narrower base. So we start getting above this 280 mark. It could be a quick run also. That's something I'm keeping an eye on. Gold, I'm watching for some backfill rollover play from Thursday to Friday's gap. Other than that, the only bullish thing is if it closes above 2016.10. Silver still did trigger the double. Little bounce back, but not invalidated. We have the Japanese 10-year. We talked about that on Friday. Now, they can intervene at any point, even before it gets to the full 100 basis points. That's why they're trying to sort of keep the market on its toes. But so far, that 50 peg is clearly broken, and they have not stepped in yet. What does that mean? I'd be keeping this is, again, keep an eye back on the 10-year Japanese yen. Unless they intervene, this thing can really turn into another weakening of the yen and a push higher. If we start closing above where we are now, 144 is the next level, then 145.14, and then going to be watching for a potential retest of last October's high range unless they intervene in the near term. Euro, watching Friday's high and low for the breakout or breakdown play. I'm expecting a breakdown play because we've closed below the 62.5. And then I will ratchet down to the bigger thing, and my next target is going to be the 108.75. A close below there, then I'm targeting the 200. That's exactly how I'm watching for that to unfold. Sort of similar in the pound. Sort of similar in the pound right here. That's really about it for that. Let's get to the spiders and the Qs. Spiders. So back from the single day, our massive day that reversed on Thursday. We then closed. I was using the single day harmonics, and we closed back above it on Friday. That key level was 456.50 area. 457.70 is looking where we're opening. 457.50, then 480, 458.45. 459.40, 45 area, and then the breakout above that would give me 461.27, and this for the spiders to reconnect with the 87.5, it's 463.50. The major support area I am now looking at on any pullback. First, I'm using 454.50. Then I'm utilizing 453.50, and then my key, very, very, very key support, 452.50. It just happens to work out that way. There's nothing magic that it's lining up with all the 50 cents. Those are the major ones, but if you want the major level to watch for, 452.50. And then a close below Friday's or Thursday's low would start doing some minor technical damage for the bigger pullback, and that low is 451.55. On the Qs also closing above the 62.5 on the multi-day pullback. So going to be watching the first level higher is about 384.50 to watch for today after the open, 386.28. And then the highs, 387.98, 388. The highs from Wednesday 19th to reconnect on the Qs with the 87.5 would be 389.40. Remember, the 87.5 rules test out stronger on the futures. That's why I follow it on the futures more so than the spiders and the Qs. But you could still have some key upwards price action on both those, with daily cycles still moving up and weekly cycles still moving up on both. All right. What have I missed? Is there a potential weekly double bottom in crude? Then I'll get to Google. I'll get to some other stuff. Let me just pop back into crude. No, this is way too big a mess. This is not. It would be a breakout play, and I would utilize these key levels. Now, could be a major breakout play. You don't need it to be a double, because the next, beyond 88.50, you have a significant level about 99.50. Boy, it's a level of 50s today. 99.60. So those would be but that's going to make inflation rear its head. Tesla's a mess right now. 270, 277, and then 284. Remember, the only bullish thing is you have this gap left behind. Key support, if it does break below 255, is coming in at 248. And then the key breakdown level is 240. We'll go to Google, NVIDIA. This is triple top territory. If we do break out, still going off that 497 harmonic higher. We have still not closed below the daily rotation zone. We had the request for Google. Google. I mean, theoretically, is still up. Still up 134.50, then 143.02. Short term, if on any breakdown play, we have back to key support coming in at 126, and then the gap fill. Although, if we really started to break below 126 and fill in that gap, I'd be watching for more of a consolidation and for the 117 area to hold. That would not be positive in the short term. A minor pullback to this breakout area is fine. You really don't want to see a key close back below about 126 though, from the bullish side. What else? What else have I missed? Let's take a look at SoFi, which I have not looked at in a while. So, yeah, pre-market beat. Let me clean up this chart. Wonder where the next major targets are. Well, 11.89 to $12 would be the next major target higher, and I want to just see how that lines up with the most recent harmonics. So 10.95 or 10.55 would definitely be a breakout stop raise, and then 11.68 to 11.89 would be a key target area. All right. That's where we sit with that. Again, let me peek back at Tesla. I'm just looking. Let me look here because this is technically a triple bottom. But we start getting above this 273 area. The targets I would utilize on a short-term pop would be to this key open 279.61, and then for the gap fill 291.13, especially if we continue to have a bullish market. That's it. That's about it. Hope I covered all the markets for everyone. Apple, which is earnings on Thursday. Still in this minor. The only thing that I'd be watching for is this close below Friday the 21st low. You still have a minor gap fill, and we could then see a pullback to about 186.70, and that would be the first close below the rotation zone. Wow. We haven't had a close in Apple below the rotation zone since back in March. So that's the first thing I'm watching. None of these it dipped below the rotation zone, but no close below the rotation zone since March. Other than that, on a break higher going into earnings, next key target would be 201.14. 201.14. Where is this going in? I mean, this is 32 for a P/E ratio on Apple. That's insane. And then the key major target on a stronger breakout would be 207.50, then 216.74 if it just keeps powering on. Those would be the next key targets. All right, I got a run today. No, it hasn't, but that's a nice standard pullback. This is where, even though it did, I mean, it came within spitting distance of that first, I'd be raising the stop anyways. This would pull back to the 200 with the rising rotation zone. And so this could even be played on another break above this 32.90. It could be a breakout play even on a short term if you're not in the double to 34 and then 35.03 with a tight trailing stop. So that's where that sits. Thank you for bringing that up. Car hit all 3 weekly double bottom targets. You guys are just going to keep me going, aren't you? Yep. And then kept going. So how could we talked about this? Remember, also you got the close above the 62.5. So, and look at you got the reaction at the 87.5, the little pullback, and now it's going to new highs. So there's another. Again, nothing's with this is guarantees. You always put the probabilities in your favor, and then you manage your stops. And as we see, the Russell could be a stop on a double. Not every double works, but the probabilities are very good. And then learn how to use the harmonics, because if you want to keep trailing, you can target that 87.5 to 100 range and just use a trailing stop. And if it breaks out higher, what am I going to do going into the open? Oh, I'm going to put up the reverse harmonics. And there you go. So not saying it can't pause, especially at these all-time highs, and pull back a bit here. But if it continues to power higher, you got 62.11, 65.34 are the next targets. That's exactly how you come up with target areas for something going to new highs. With that, I will see everybody later. Just peeking at the open real quick. I don't like how it's just the A. Not much going on. Sort of a quiet open. Chicago Fed numbers coming up in 15 minutes, and then the Dallas numbers they were at 9, right? So I will talk to everyone later. Bye for now.